Hey, good morning, everybody. Bob Trade Genius, 7th of March. Um, I'm going to go out on a limb here and say I think the this big sell-off we're having is likely abating, and I'm going to show you two charts to say what I'm going to say. So here's where the VIX started to rise. What people always draw obvious conclusions. They're thinking, hey, the market's overvalued, or the coronavirus is causing this stock market sell-off, but it's actually far simpler. There was an imbalance once again in the market. And the way it happens is that we have now passive investing in the major ETFs that are market cap related. So basically, the bigger stocks get the most value, which drives the indexes higher. And the risk parameters are around volatility. And so some really clever people determined that if they could suppress volatility, they could drive the stock market higher. And so we had this thing called vol suppression, right? So I'm probably not telling anything new. Well, by the time the first of the year rolled around, the imbalance was becoming untenable. And this is what it looks like when the dam breaks. And so it started to come up, and then you had this gap up here. This is the VIX. And then it exploded because what happens is that once these guys are underwater and are naked doing this, so the only way they can hedge is buying back the contract. And as they did it, they basically caused their own problem. So it becomes a feedback loop, and then it just drives the VIX higher. Then we had a little bit of that relief rally, and then boom, we hit it again. We got over 56. This is the highest it's been since Lehman Brothers, by the way, when it got to 80. This is untenable from a long-term standpoint for many reasons, because holding high VIX is expensive, because people are buying out of the money contracts, put contracts out into the future, and these people who bought here they're gonna lose money and expire worthless. So you had this move here, and all of a sudden now we learn on Friday that a big market maker in Chicago that was involved in this game got blown up. In fact, two of them got blown up this week, and you can see when they got blown up. And so they're gone, and it's immediately. This is 15 minutes. I'm going to show you now. Go to an hourly on this. Look at this. Once that market maker got taken out, the VIX plunged because they no longer were buying it back to try to protect their position. And it's over. I think the fever broke, just like what happens with a virus. So now I'm going to show you SPY, and you can see the same thing. Boom. So this is very interrelated. So volatility and the broad market. So my expectation is, I got another buy signal here on the close, is that we're likely to get a relief rally here, and unless somebody else is lurking out there that's going to drive this thing higher. I know everybody's concerned about the virus, but in the cold mathematics of stock markets is, the people who are most affected, okay, and the people who have the mortality are already known. And so the market is already determining and calculating the outcome. And they also know that you go into spring and summer, flus die down. So unless this is a bioweapon that is going to not obey those rules, people know that this will pass. And then we know that everybody and their brother is working on vaccines and antiviral therapeutics and yada, 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 yada. And they're going to start focusing on other things now. At the same time, you have the Fed and the national government's throwing money at this thing like no tomorrow. So that's my expectation. I'm looking for a relief rally. I know there's a lot of people thinking, hey, we can go down 2450. There's a gap to fill, and there's also a down to 2300. There's things to worry about, So this gap got filled here, and now we're looking down. You have to even get even farther out. That's how far back you have to go now to start finding these gaps. And you're talking down here in the 245 area in here. So, a lot of people are thinking we're going to unwind the last 2 years. I think it's possible. This is a bit of a diamond pattern. I'm not saying that we're going to go back up to new highs yet. A lot of times we test these lows, okay, over again to make sure that they're durable. And then if you apply Fibonacci to it, it could go up and come down to here and then shoot back up. So those are things to keep in mind, but it was definitely an artificial rise in October, in my view. And so this whole area here, this was all vol suppression, and I got wiped right out. So that's why I'm thinking we may just stop right in this area here, maybe a little test down, but we're going to probably get a relief rally from this first, in my view. So you heard it here first. You guys have a great weekend. I'll catch up to you later. Bye.